You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
I'm so excited today to have Mike Levitt on the CEO Blockchain Interview Series. Mike is...
Thank you, Dan.
Thank you. Mike is the co-founder and co-chairman, and yes, even the CEO of Core Scientific. And Mike brings a wealth of experience at all levels, as an operator, as an investor, as the CEO or former CEO, I should say, of Kane Anderson, as vice chairman of Apollo Global. Mike, thank you for being on the show. Sincerely, we're going to cover a lot today, and hopefully I won't ask you too many embarrassing questions, but we know each other pretty well, and we'll have some good time.
I appreciate as many softballs as I can get.
Yeah, well, softballs I don't think I'm going to throw at you, but we'll see. So starting off with the hard one, okay? The industry, meaning the Bitcoin and Ethereum, the crypto mining industry, last year, eclipsed $30 billion in revenue in the context of crypto mining revenue. That's about 15 billion by Bitcoin miners and about 16 billion by Ethereum miners. Talk to us a little bit further about the industry itself and where you see it, as the institutional guy, because I gotta say, I see a lot of institutions coming to this market.
I agree with your conclusion wholeheartedly, in the sense of the call it the institutionalization or institutional interest and acceptance and engagement in our industry. That said, when talking about the industry itself, I still think we're very young. It's very early days in our industry, and that's one of the really exciting aspects of it. I've been very fortunate over the course of my career to have been working in the industry through various waves of innovation, whether it was junk bonds becoming high yield bonds, and early leverage buyouts becoming private equity, and loans and bonds becoming credit, the advent of structured credit and securitizations. I've been fortunate to have been working as a part of all of those financial innovations. And I think that what we are seeing today is probably the greatest financial innovation era of certainly my career. And as we look at the advent of truly decentralized finance, the advent of digital assets and all that portends, I think we're early. And so when we talk about 30 billion in mining revenue last year, which is certainly a significant number and certainly shows tremendous growth from prior years, I still think it's early. And I think there's a lot more that will be done. I also think that engagement by institutions globally is in the first inning. We're seeing now in the equity markets, institutions investing in companies like ours and Coinbase and Galaxy and others. But also we're seeing traditional financial services companies recognizing this wave and recognizing this necessity and recognizing this opportunity, whether it's a Mass Mutual that actually acquired Bitcoin for balance sheet purposes, an early adopter, I'll call them, about a year or so ago, whether it's the JP Morgans or Goldmans or others on the street that are creating investment funds to give customers the opportunity to engage in Bitcoin and other assets. So I think it's early days for the industry. I think 30 billion is a great start, is how I would put it. But we got a long way to go and a lot of room to run.
So tell me a little bit, because not everybody's as familiar as I am. But how did you and Darren Feinstein and the team at Core come together? It's an interesting journey.
Sure, happy to comment on that. First, to be very clear and give credit where credit is due, the essence of the idea was my partner, Darren's. He has been engaged in Bitcoin mining for over a decade now. And one of the things that he concluded as he was trying to mine was that it was very difficult to find high quality, reliable, highly secure, high operating uptime, if you will, institutional places to plug in mining computers. Call it institutional grade infrastructure. And 2016 or so, Darren, myself, and a couple other friends got together, had this discussion, and came to the conclusion that developing institutional grade infrastructure for Bitcoin mining specifically and blockchain computing more generally was something that was inevitable in the United States, was something that was going to happen in the United States. There are very few technologies where the United States has lagged the rest of the world. Blockchain computing, noticeably one. And so Darren and another of our partners, but really Darren, went out and sought to find high quality infrastructure that might be available and to call it ready now. And he located a shuttered textile manufacturing facility in Marble, North Carolina. It had previously made, among other textiles, the thread, that yellow thread in your jeans that you might see, ubiquitous yellow goldy thread. And sadly, 250,000 square feet under roof with two fully developed power substations from Duke Power and TVA on site in a well-located place away from communities, residences, and completely shuttered. And he was met with welcome arms by the mayor and other folks in the town. And we revitalized that facility, a little bit of construction, adapted it for our purposes. And that really, I think, is the first scaled, high quality, call it institutional quality infrastructure developed in this country for Bitcoin mining or blockchain computing. So it was that kernel of an idea that Darren and our other partners had come up with. I had invested in TMT and data centers in the 90s, so knew enough to be dangerous, but not enough to be terribly deep about it. But we decided that we wanted to set about developing high quality, high reliability, high security infrastructure in the United States. And we came together around that single concept. As I said, the kernel of that idea, really, I give full credit and appreciation to Darren, one of our other partners, Matt, scoured the country to raise capital so we could get started. And really from that idea and that capital was built our company. It's been the collective effort of a lot of very, very talented people. I don't in any way want to leave our audience thinking that, oh, Darren and Mike came up with a thought, because it wasn't just that. There are a lot of people. Our head of construction and power, who's an extremely experienced horizontal construction person, Wes Adams, integral to development. Many others. I mean, we've got over 200 people at our company, serious technology professionals. And so the group coming together really has built the company. That initial kind of get started, I was fortunate to have some friends that had some really good ideas, and they decided to include me in their thinking. That's how we got started.
You bring up an interesting point, and I don't know that folks can necessarily appreciate this until they've seen the facilities, right? And I've seen a bunch of your facilities. A lot of these facilities, it took a lot of ingenuity because the solutions weren't evident when you were building out that infrastructure, right? So it definitely took some creative minds to build the facilities.
It's a really good point. The engineering issues attendant with airflow, heat dissipation, power provision, et cetera, that we have to account for in the industry are quite extensive. And our company has something like 70 plus patents issued or pending relating to the technology and engineering applied to Bitcoin mining. And so the work that our folks had to do, and by the way, a little bit of trial and error, right? Yeah. Our latest facility design is extremely technical and extremely efficient. It wasn't our first facility design. And so it did take a lot of hours at the drawing table, so to speak, to accommodate the issues, especially around heat dissipation, right? Because the holy grail, so to speak, is uptime, right? If we're operating ASICs, we want those ASICs to be up and running for as much as possible. And if they aren't cooled and if they aren't powered, or if the power and cooling is not adequate, they go down. Fans go down, boards break, etc. So you're right; these are highly engineered, and it takes a lot of effort, a lot of thought, and a lot of talent. And we're lucky because we've got all that in-house. And to be clear, we build and operate scaled infrastructure. There are, Bitcoin mining kind of is very broad in the sense that there are miners that have metal containerized solutions that can sit in a field or a parking lot, if you will. Nothing against those are good. They work. Our facilities are all facilities that are running at full scale and developed. They're running, over tens of thousands of ASICs at a time. And so you've got the engineering that you have to put in place for that heat dissipation and power provision. But then there's also the technological overlay that you want to put in place, because you have to, computers or ASICs require management. They require monitoring. And when you're doing it at scale, it's not as simple, right? If all it is you and me walking up and down an aisle looking for red lights or green lights, and if it's got a red light, you try to pull it out, that ain't going to give you much uptime. So we also had to develop a technological overlay, software, that manages now in the hundreds of thousands plus of ASICs, so that we know, are they performing up to their specified capability? Is there an issue? Are they broken? Do they need maintenance, etc.? So the technology aspect of Bitcoin mining is also something that I think people don't fully appreciate, the management of it and the technology it requires.
Yeah, no, you're definitely right. I remember about a year ago, I saw an article that was that had this image, frankly, this young kid, probably 25, on a skateboard, running up and down this huge facility. And I'm just thinking, really, that just is so wrong. And when I visited your facilities, they're so clean. It's what's the old say? Cleanliness is as close to godliness. I mean, I don't want to get into religion here, but they are really, really clean. So just changing the subject around, because I don't want to go preaching to the choir here. We get into a lot of debates on some of our social media efforts, right? About exactly what Bitcoin is. So let's touch on a couple of key KPIs or definitions, right? Okay. So Bitcoin, in your mind, commodity, store of value, currency. What is it?
Gonna pull me into that, eh? Well, so first of all, in the United States, I think it's fair to say both the IRS and the SEC don't treat it as a currency. It's really been the Commodities Trading Council that has sort of overseen, which would tell you that it's a form of an asset, if you will. You could call it a digital asset.
Yep.
Assets are by their nature a store of value, right? An asset is a thing of value. The interesting aspect to Bitcoin as an asset or as a store of value, if you will, is the unique divisibility and transferability of the asset. Because there aren't a whole lot of assets that are as divisible or as transferable as Bitcoin, right? If I had a big bar of gold in my left hand, and you said, hey Mike, and I said to you, hey Dan, I really like your sweater. I'll give you 1/100th of my bar of gold for your sweater. Well, I don't have a pick or a hammer. I can't get it to you because you're, I think, somewhere on the other side of the country from me. On the other hand, Bitcoin is an asset like gold. It's a store of value like gold, but I could very easily get on my computer and move to you, whatever number of Satoshis or percent of a Bitcoin I need to move to you to pay for that sweater. And so those characteristics of transferability, divisibility, fungibility, right? Your Bitcoin that you might have is just the same as my Bitcoin, right? Those all tell you that it's an asset, but an asset with unique characteristics. And it's those unique characteristics that make it so wonderfully suited to a future that envisions more decentralized finance, or which I would call more direct finance, less intermediated finance. Not that it's a currency. It's at least under the way the SEC and the IRS look at it, it's not. But it is an asset of value that is easily divisible and transferable, is fungible. Your Bitcoin looks just like my Bitcoin. Your Bitcoin has the same value at any point in time as my Bitcoin does. And so it's these unique characteristics. And then when you overlay that with the fact that it resides on an immutable, which is to say untamperable, transparent, confirming ledger, it becomes a very interesting asset. And it's for all those reasons that it's become such an interesting asset to a growing population globally.
Yeah, it makes sense. I mean, in the context that, ETFs are one of the great attributes is the transparency, right? People are more comfortable with transparency, right? They trust transparency. So
Right.
I get it. And that's probably part of the reason why a lot of people in the ETF community have kind of gravitated to Bitcoin. But that's a whole nother subject that I don't want to deviate from.
Well, but look, but you raise a good point. Trust and security are very important when you talk about assets, right? And right, I trust if I'm buying shares in one of your ETFs, right? I trust that in fact what is in there is what you say is in there.
Yep.
And I can actually go on and I can verify that what you say is in there, right?
Yes.
And I'm also quite comfortable that if your shares are my shares, a bad actor is not going to be able to come in and take those. And I wake up tomorrow morning and I no longer have that investment. Bitcoin similarly has those characteristics of trust and security, along with transparency and everything else I've talked about. But I think you raise a really good point about that. The other aspect of Bitcoin, I guess, that probably is worth discussing briefly is, assets are also held for financial or economic reasons, right? If I own gold, it's because I think gold will appreciate. If I own real estate, I may think real estate is going to appreciate. And it's the other interesting aspect of Bitcoin is there are many that hold it and believe it has potential for capital appreciation, thus it's an asset, but also it can be used for income generation. Quite often I'll equate it with people who, kind of ask me kind of at a basic level, say, look, I own real estate and I expect out of my real estate capital appreciation and income generation every year. Similarly, those values are available through ownership of Bitcoin.
So moving along, I love that as an answer, by the way. Thank you. I really want to say a whole lot of things, but I'm not going. I'm going to stay the course here.
You're going to keep us on point, whatever that point is.
Well, no, I mean, I got to get this definition out of you because I think it's an important one, because I don't know that people understand it, and I think that it's important, frankly. So hash rate, the definition, explain it in the context of difficulty, why it matters for folks.
Since I don't have an engineering degree, simply hash rate is a measure of computing power. And so we talk about hash rate in our industry as in we, Core Scientific, operate so many exahashes or so much hash rate of computing power. We talk about in our industry the global hash rate of the Bitcoin network. The way I like to think about it is the global hash rate is simply the amount of computing power that resides on the Bitcoin network and is dedicated to operating the Bitcoin network, to processing transactions, to solving for blocks that release Bitcoin rewards. It's just a measure of computing power. And each miner has a certain amount of computing power or a certain amount of hash rate that it is operating, right? And so rather than getting technical with it, I would think of it simply as the amount of computing power. Another way to think about it is, every 4 years or so, I seem to upgrade my laptop. And every 4 years when I upgrade my laptop, it seems to be 4 times more powerful, but but it's not 4 times more expensive. And it's probably 10 times more efficient. The truth is that computing power in the world of the Bitcoin network is similar. Each A6 computer, every generation, becomes more powerful and more efficient, which is to say it handles more, it provides more, but it requires less power, less energy, less everything to operate. We look at global hash rate in the mining industry to determine how much competition we have to mine each block, remembering that a block effectively is solved, or the Bitcoin within that block is released every 10 minutes. And as computing power or hash rate grows, the competition increases, and therefore each one of our ASICs becomes slightly less productive. And if we want to keep up proportionately, we have to add computing power to our fleet. Was that an okay
I think
explanation?
I think that's perfect, and it leads to a bunch of different questions, obviously. One of which is it fair to say that bigger is going to be better in our industry? I say our industry, in the Bitcoin mining industry, because the ability to upgrade is going to become each year more important.
I would say companies that are providing mining services like ours, that bigger is better, but I want to be clear about it. So at Core Scientific, we own and operate A6 computers for our own account, which is to say the Bitcoin earned goes onto our balance sheet, but we also operate for the account of others, right? We provide that place. If you want to own some machines, Dan, you can call us and we'll plug them in for you. We operate them, and those rewards, the Bitcoin, goes to your account. And by achieving scale, we're able to provide to ourselves and to our customers a higher quality product, right? Higher quality is simply lower cost, right? We charge you hopefully less for you to operate or own your computers than if you were to plug them in your family room or something, right?
Okay.
We maintain them, the uptimes are greater, they're more productive. What's important for us, and we say this all the time, our mission is to provide high quality infrastructure to enable and power and secure the Bitcoin network globally, right?
Yeah.
That's what we're trying to do. And so the scale that we have allows those that participate in the Bitcoin network through us to do so in as efficient a way as possible. It's efficient, it's secure, it's cost, probably lower cost, it's higher up, things like that. And so yes, scale matters in the sense of providing the most efficient infrastructure. As it relates to our own self-mining, because you're competing with the global network, with the fact that we operate 50,000 ASICs or 10,000, we're going to end up with our pro rata share probably.
Yep.
We don't pick up any leverage through that, right? It's really the infrastructure. And by the way, in the environment today, it's infrastructure that's in short supply right now.
Very much so. This I know, which is a surprise to some until they go out and they try and find a facility, right? And then they find out the shortage. Now, we've talked about Bitcoin, but I mean, if somebody came to you and said, well, I want to mine something else in your facilities, is that a possibility?
It is, and we do. We actually operate equipment that mines for Ethereum, for example, currently, as well as for a number of other digital assets. The vast majority of our operations currently are Bitcoin, both in terms of our self-mining fleet and our hosted fleet. That said, we also are significant participants in a couple of other coins as well, and that's something we look at all the time. We actually have internally a mining review committee of a number of our professionals that meet every other week to talk about what else should we be doing, what other digital assets should we be looking to participate in. We're quite open-minded in that regard, but we certainly have a bias in favor of the long-term viability and benefits of Bitcoin as expressed by, our operations.
So when China went unplugged, we'll say, there was some disruption that ended up being very positive for the industry. And one of the things I think that a lot of folks don't appreciate is that location really matter, right? In terms of mining. One of the things that I look for when I am visiting a site is where it's located. And in your case, you've got multiple locations. Is that? Do you agree that that's a competitive advantage to you to have multiple locations, different geographies?
They're different models, right? And different people prefer different models. We like having some geographic diversification. We quite specifically were looking for locations with excess reliable power, right? We don't want to be a burden on the grid in any location or any geography. In fact, at times when there's peak or emergency demand on the grid, we curtail our operations to make sure that we power down so consumers in our regions don't have to. But when you talk about geography, right, where was there excess power? We only go to places where the communities want us, affirmatively want us. I mean, I get invited to ribbon cuttings, something I never imagined in my life I'd be invited to. I'm due for a ribbon cutting in North Dakota. I only ask that we wait until it thawed a little bit. So I think I'm going to go up there in March or April, not January, February. But so it matters, but ours is a little bit of a unique story because the first 3 facilities that we developed were all formerly shuttered or abandoned industrial facilities that already had power provisioned to the sites, and that sadly it's NAFTA, US manufacturing was taken either south or to Asia, jobs lost, etc. And we reopened those facilities. We've revitalized them. We've created jobs. We've created vitality in the communities. We worked with the local governments to bring those into operation. But they had excess power. They wanted us there, right? We made the places, I think, better. And I think if you were to talk to the local officials at any of our sites, they would tell you that we've been very, very positive for the community. And so, yes, location matters. The other thing, though, is we make sure that we're not in locations where we're going to disturb neighbors, because there's two aspects to operating mining facilities. One is the power that people talk about. And as I've said, we go where there is excess power, and if the power we're using is needed on the grid, we down power, and our software gives us the ability to down power thousands and thousands of machines like that. So we're actually viewed as positive. You know, we're a contributor from the point of view of the utility companies and the power grid. They like us. They like having us. But also there are noise considerations to these facilities. And so, because when you got that many fans and that many computers operating, you know, if your windows are open, so to speak, it can be loud. And so we make sure that we're also not in areas where it's going to be an issue for our neighbors. So our facilities are all situated locationally where we're good neighbors, which is right. It's important to our company, as you know. We are net carbon neutral. That's important to us. Always will be. The more green energy we can help develop, we can be instrumental in developing, the happier we are. And so we work with power companies in that regard. We want to be good neighbors, as I said, in at least probably now, well, 3 we repurposed. The 4th facility, they want us to come cut the ribbon. We worked with the town. They liked the jobs. We actually helped them get a center for technology education started. You know, we're very conscious about being good citizens and thinking about where you locate these matters, to your point. So we try to be very thoughtful about where we locate our facilities.
So in an industry that is highly fragmented, that is an industry that is focused on scale, a competitive advantage sometimes is achieved through consolidation, right? Yep. In your career, you've seen a lot of consolidation and how synergies can be achieved, right? Is this an industry ripe for consolidation?
I think the answer to that is going to be yes. You're right. I've in my time as a private equity professional, I worked for a firm whose investment strategy was known as buy and build, which is to say gain a foothold in the industry and then look for rational consolidation opportunities. The most extreme example of our having done that was in the radio broadcast industry, where we started with 2 radio stations in Seattle, and by the time we were done, it was 2,000 radio stations in the U.S. That's an extreme example.
That was early. Was that early in your career, I hope?
That was in the late 90s. I was just a kid. And I think that like a lot of capital has been directed at our industry. And a lot of folks have talked about building out infrastructure. I think that the talk of building infrastructure exceeds the reality in the United States, at least, of what will get built in 2022. We'll hit our numbers, but I don't believe that everybody that's announced infrastructure will get their infrastructure built. It's complicated. There's supply chain issues, et cetera. I do think every industry that I've ever been in early on you've got a lot of entrants, and then you've got a consolidation and cleansing phase. And by that, I mean, there are any number of folks in our industry who are building good companies, but they would be better served to be part of a bigger company like ours. And then there are those that probably shouldn't have gotten started, and they'll be more cleansed, which is to say they just won't be in existence. So there'll be consolidation opportunities, and there'll be those that unfortunately the business plan just doesn't make it. But yeah, I think it's very fair to say that you'll see consolidation and scale growth in this industry as we try to provide the infrastructure and opportunity for growth in and around digital assets and decentralized finance.
You need capital in this industry, and you need technology, right? We just touched on capital a bit. Talk to us a little bit about technology and how you see it evolving. You mentioned it early on before, but I have to say, I do worry about technology disrupting the industry as well.
Well, the industry in and of itself is a disruptor. So we have to be very thoughtful about how might we be disrupted. And I think that certainly we as a company try to be thoughtful and mindful of that. We've got approximately 40 people in our technology group who spend all of their time thinking about, on one hand, how can we develop technology that makes mining better, faster, cheaper, more efficient, etc. And then we've got a lot of folks that are thinking about future blockchain technologies, right? Where is blockchain computing going? How is it that AI will play into blockchain? Where is that convergence? Where will there be value? Where can we be helpful and perhaps even instrumental in driving advancement of these technologies? And so we think it's worth having that investment in those folks to be thinking about this and at all times. Because any business that values trust and transparency, and that can be made more efficient through kind of direct interaction, is a business that probably will be adopting in one form or another blockchain computing.
I agree with you. And so here's the fun question. Where are you going to be in the year 2140, Mike?
Well,
what happens? What's your future? You know, how do you see the future?
we don't have anybody at our company working on cryogenics. So sadly, I probably won't be around. I suspect that my great-grandchildren's great-grandchildren will be transacting directly using Bitcoin with their friends. Like 2140, I suspect you picked that year because that's when it's estimated that all of the Bitcoin will be mined.
Exactly. I get this question all the time, by the way. You know,
under the sort of the asymptotic curve that is the halving every 4 years or so. But really, practically speaking, the business will be evolving towards more of a transaction enabling business, making sure that the network itself works so that our great-grandchildren, the little Weiskopfs and little Levitts, they can probably directly exchange real estate as opposed to having to, get a bunch of notaries and title companies and all that stuff, right? If little little Danielle Weiskopf in 2140 is a sweater maker, and little Michelle Levitt wants a sweater, she'll be able to just, send a couple of Satoshis to your great granddaughter. And, nobody's going to be clipping 3% or 4%, most likely, off of that. And it's immediate settlement, right? And so really long term, certainly past any time that I'll be in the business, we're going to be rolling much more to a network that's enabling disintermediated finance and transactions. And, the wave of decentralized finance, which simply means less intermediation, more direct dealings, direct ownership, transparency. That wave is not going away. And by the way, I'm not saying that any existing businesses are going away. I think everybody's adapting. They're adopting and adapting.
And to that point, the funny thing is, we get questions from advisors about blockchain. Why do I need it? And my answer is partially, if you're investing in the S&P and you're not cognizant that some of those companies are not embracing blockchain, those companies actually may be disintermediary, right? Because they're not embracing the future.
And look, I think and this gets back to how we started. A lot of companies are embracing the future. Yeah. A lot of companies are thinking about how to embrace the future. Every one of the big banks has a team now. Everyone has a significant size team dedicated to figuring out what's our role. How do we engage? How do we stay relevant, right? Companies want to stay relevant. That's their ethos.
And why is it? And then I'm going to ask you two wild card questions. And why is that? Well, because if it lowers cost and accelerates growth, how do you not want the blockchain, right?
And the other thing about it is it's inevitable. The one thing I've found, and look, I've invested in food companies, broadcast companies, telecommunications companies, now Bitcoin companies. Value wins, right? Every successful company provides a good value proposition to their customers, whether it's a hamburger chain, or it's a bank, or it's a clothing retailer. You have to provide value. And if companies don't think about where the value proposition is going, they're going to become irrelevant. And that's why I think that all of these companies are thinking about how do we provide a continually improving value proposition, whether it's healthcare, whether it's banking services, whatever it might be. And blockchain and decentralized finance are all about providing better value, a better experience, a less costly experience, a more direct experience, a more trustworthy experience. And that's the world is inevitably going there. And these are just technologies that bring it there.
Yeah, so the two wildcard questions that I want to ask you, and then we'll kind of wrap it up. Break it down from an industry perspective. Which industries might be most affected? And let's put some context here. In the next 5 years by blockchain in your mind. I mean, and put aside finance, because that's just honestly almost too obvious.
You're going to take the easy answer off the table?
Yeah, I'm going to do that. Well, by the way, an obvious one that I think is underappreciated, and you mentioned it, right? I think utility companies are actually benefiting by all this, and people don't recognize that.
Look, I think so. utility companies are benefiting because the networks that digital assets run 24/7, which is to say they're always on. And so there is a base load that is provided. But for example, Bitcoin mining, we can down power. So we're there to take the power when it's excess and available. So they can build out knowing that they'll be able to sell it, i.e. it's economic. And we can down power if, for example, some sort of a weather event takes out a power generation asset in a particular region, and there's not as much power available, which happened recently. We down power. If it's a particularly bitterly cold day, and they need more power for sort of the consumer side of the grid, we can down power, and it's not a problem for us. So we help them build the economic case for developing more renewable energy, right? Flat out, we do that. So look, utility companies benefit, but they've been benefiting as technology advances. Technology draws power more efficiently every year, but it draws power, right? And so utility companies, they benefited, when email was created, right? There was an early story about how, email was going to use all the power that the planet had to power email systems, right? Well, it didn't happen, right? But utilities benefit. But really, if you think about it, generally speaking, every industry that benefits from being more efficient, and every industry that has any aspect of trust built into it is going to adopt in some form or fashion blockchain computing, probably overlaid with AI, because at the end of the day, AI is what really we can use to parse all this information that will be available securely and immutably on the blockchain computing. And so, it doesn't matter whether it's healthcare or aviation or gaming or retailing or real estate, right? There are efficiencies that all of those can gain and will, right? It's inevitable. It's inevitable. You would have never imagined 30 years ago how ubiquitous the computers, the machines that we're on, the iPad that you and I are conversing on today. You never would have imagined that it would be so ubiquitous, but the efficiencies gained, right? It's about efficiency, transparency, trust. And that's almost every industry, which is why, yes, utilities gain for this reason, right? Mm-hmm. Yes, healthcare will gain for this reason. You think about the characteristics, and that's what really drives, ultimately what we're really driving.
Well, we definitely see healthcare as a beneficiary because of record keeping alone, right? Insurance companies, I think, are also going to benefit as well. Yeah. But the second part of the question, or second question, is looking backwards 5 years from now. What are people going to look back at and say, "Wow, that was so obvious. I should have invested in this." Right? I'm not talking about crypto, but what is so obvious today that's happening that people are going to wake up 5 years from now and say, "Wow, of course that change was going to occur."
One, I think people are going to say, "Wow, I should have bought Bitcoin." That's kind of self-serving. And I don't mean to talk my own book, but attendant to every halving has been kind of a new level setting. And, we'll go through another halving a couple of years from now. But I think that, in a less self-serving way, I think that adoption is growing exponentially. I think people are going to look back 5 years from now and say, wow, the adoption occurred much more rapidly than I thought might occur. I think that people will look back and say, wow, I didn't realize how efficient these networks, the efficiencies they could lead to. And I think how ubiquitous it will become. It will be, we'll have far fewer what I would call modestly educational conversations, because the adoption will have been so broad and so pervasive, and the understanding so pervasive.
To your point, I find that it's a lot of the 20-something-year-olds who are embracing it, right? Ahead of, respectfully, guys like my age and your age, right?
We're slightly over 20.
Yeah. And that's why probably some people don't get it, right? But, when you look back and you say, God, I remember having to place an order, and that runner on Wall Street would run the order down 10 blocks, hand it to the specialist, et cetera, right? It
Right.
took so much, and it was a week before settlement occurred.
And that's how you bought a stock.
Yeah. It's going to be instantaneous.
Right.
And it'll be interesting to see how it all works out.
Oh, look, it's going to change. All of the things that we've had to have notarized, have verified, have validated. Like I said, whether it's buying a stock, whether it's trading a loan, whether it's buying some real estate, accessing medical records. I mean, you name it. There are ways to do it so much more efficiently, with so much more security, and in so much more of a trustworthy manner. And ultimately, those characteristics win. You look at every business over time, those characteristics win. And those characteristics are adopted by every quality business you can think of.
Mike, thank you very much for your time. Thanks for block and tackling for your shareholders. And
always working for my shareholders. We've got a great shareholder base. I love them all.
Have a good day. Thank you.
Thank you, Dan. Take care. Bye-bye.